Welcome to Momentum Monday. Today is December 10th, 2023. Howard, how was your weekend?
It is, it's good. We have a Hanukkah party, so I'm going to do the short version today. We've got a lot of people coming over. How's your weekend? I'm going to come to San Diego this week, so I'll see you.
Cool. I would love to meet you then, if you come.
Yep.
All right, let's talk about the market. We saw a bounce in the mega caps, as we know. The week before, there was a rotation from mega caps, which kind of became source of liquidity. And as people were looking for more risk, there was some rotation into small caps. And then last week, we kind of saw the opposite, as small caps consolidated, kind of went sideways, and money went back into mega caps. There's been that constant rotation between those two. So the QQQ bounced near its rising 20-day EMA, and now it's very close to all-time highs. And to be interesting, there is a chance we hit it this week. Of course, there is an FOMC meeting on Wednesday. Yeah. Everyone's guess is that they'll try to play cool, and they'll probably try to cool down the market frenzy, but you never know.
Yeah, the market's looking ahead, not to the election yet. So you have still some, you're climbing that wall of worry. The Russia-Ukraine war is coming to a head, right? Like, something's got to be done there. It's just a mess, right? So both sides are just not going to give in, but it's a mess. And then Israel's basically kicking ass. There's a lot of surrenders this weekend, and the market was pricing that in, it feels like. So you've got the wall of worry. The headline risk is still just a mess, but like underneath it all, it's a great market. People are buying stocks. 6 trillion of fuel on the sideline. I think at some point next year, you're just going to get some kind of vicious, once they lower rates. I mean, Biden's going to lower rates at some point to give the economy a chance to be goose. He's got a lot of room to now work with the market. I think everybody's front running the January, February rate cut. You've got seasonality. You've got great technical setups. You have hedge funds buying dips to just make their year. And I don't know, there's not much more negative news that could come out. You just have to, manage your own risk appropriately. I mean, Apple's all-time highs now. I think it's full of Apple. Pretty much all-time highs.
Almost there, yeah.
Yeah, a weekly all-time high. And then what else do we've got? We've got software doing well. IGB.
Super strong, yeah.
Semi-conductors kind of just marking time.
Yeah, we had a decent bounce in semiconductors, led by AMD, as people were probably diversifying their bets on AI related chips. And it's not just Nvidia, even though they're still the undisputed leader. And by the way, Nvidia also found buyers near its rising 50-day moving average. But now some of the other names are kind of trying to catch up. I mean, we have this huge base in AMD, kind of building that cup and handle here, potentially setting up for a breakout. And probably one of these is...
NVIDIA's getting all the headlines, and AMD snuck up on, what is it, a $3 stock, 5-year stock, which people have been all over this.
Yeah, even less than that. It used to be like under $2 stock in 2016. It's been a huge growth story, obviously. And probably since there are some other stocks that, semiconductor stocks that are involved with AI, like Empower and
Broadcom, AVGO. And ASML is another fantastic.
So another way to play it is probably just owning the ETF as a measure if you want a little bit more leverage. There is a SOXA, which is 3 times long.
Again, as I've been talking about, the companies that have learned this and turned profitable, Shopify, Udemy, like you can go buy profitable software companies now. They're overvalued, but they're not going to screw up this time. They understand what the market wants, and they're going to run their companies to be profitable because that's what the market paying for. Udemy, UDMY. So there's a couple
yeah,
markets. And the other one that just has not looked back is Elastic, ESTC. So it's like these companies that are really growing nicely, but now also really growing as profitable. They're not going to lose their profitability this time. Remember, these companies, it's not cheap. Don't get me wrong, don't chase these things, but like these companies have learned their lesson, right? They figured out how to get unit economics. There's so many private companies going broke where the unit economics. And so the problem with this market is just valuation in general. I don't know what to tell people, but as just a price momentum person, that looks like the best chart in the world, right? Like it's not giving an inch. A lot of this is just euphoria from who's going to be the long-term winners in this a great search open source company. And they really turned on, the profitability. So that's what the market wants. There's good rotation in industrials, I don't know what's not working other than unprofitable business, but even they've had a great run. Like Arc's had an incredible run, and boom.
So let me ask you something. So last week, towards the end of the week, JPM came out with a report, with an opinion basically saying that they think that in 2024, people will be better off owning cash or bonds instead of stocks. In which camp are you? Like, do you still prefer?
As an old man, my camp is to stay invested, right? Is it going to be 60% or 90% or 100% invested? I still remain with tech over industrials, but cash has just never been it worked for me for a year, and then anything you have in cash is underperforming. So, when things are crazy, you have to protect cash. We are now on the point where there's so much opportunity, not just in stocks, but like private credit, startups are coming down in price, valuations are coming back to there's going to be cash deployed. It's not going to be the same as the last bull market, but India looks good, Germany looks good, Brazil looks good. It's not just the US. And with Apple and Google and Microsoft, it's just hard to be bearish. But there's going to be auction because these things are not cheap. So people are going to start looking at other ways. And, when cash is paying 5%, it's not horrific. I don't think cash will continue to pay that because the government can't afford to, treasury, they just can't afford to be there. So it'll be interesting next year. And I don't think stocks, but that's just me being macro. It's not really the price. The price action says stocks go higher. You just got to manage to your own risk. All right, so I got to run. Anything else, Ivan, that I missed?
I mean, people should not forget that even in a bull market, we will see some pretty dramatic pullbacks designed to shake people off just when they feel the most confident. And I was going to ask you, what's your take on Google Gemini, the release of their AI platform?
Pull it up. I mean, I don't need my team is using it. UI on all this stuff is not interesting to me. I still do Google search. My wife does Google search. I still do everything through Google. I write my own post. I don't think you write your own stuff. You don't need to run it through AI. And English isn't even your first language. So I get why the young people, the students who need it, have moved to it because it makes sense. They're first to adopt. But we're a long way from this being useful because in our industry, we have habits that work, right? We get our data. We know how to use filters. We know how to use charts. Nothing's broken. Right? We have real-time information. So we're a long way from trusting AI. I think, reading, writing, school stuff, very interesting use cases. But in terms of do I need the tool? No. So I think chips are still the way to play. I think it's coming, and the models will get better. But until software is very personalized, like this workflow that you and I have, I don't know how to replace it. Like, I don't think you can shortcut a lot of the things that are already people are good at. But I think a next generation will be using AI like crazy when prices come down and the models get better. But
Yeah.
Google, I think, is going to win because we use Google all day and we use Apple all day, and Apple's working on AI too. Believe me.
Everyone is. So there'll be like 1,000 different AIs.
The content creators will help. It helps Google, it helps YouTube, it helps Netflix, it helps HBO. They're all going to be able to make their content better. People can create more. So for creators, it's fantastic. Look at Taylor Swift. Look at John Rahm going to there's all these new models perking up for creators. And so people with unique skill sets are going to benefit the most.
Yeah, I mean, it makes sense.
Guys like you'll work it into your workflow because you have a skill and it will make you better.
Yeah, I mean,
everybody have a great week. Sorry, I got to do it short.
It's okay. All right. See you next week, Howard. Enjoy your party.
See you, everybody.